Hey everyone, welcome back to IX. Today we're diving into a financial heavyweight that you've probably heard about, the IMF or International Monetary Fund. Ever wonder what it really does and why it's so important to the global economy? Well, you're in the right place because we're about to break it down from A to Z in a way that's easy to understand. The International Monetary Fund, or IMF, is an organization made up of 190 countries. Its main goal to keep the global economy stable and prevent financial crises. You can think of the IMF as a kind of safety net for the world economy. When a country's economy is in trouble, whether from debt, inflation, or a sudden shock, the IMF steps in to help them get back on their feet. It's like that friend who lends you money when you're in a tight spot, but also gives you advice on how to avoid the same situation in the future. So how does the IMF actually help countries? They do a few key things. First, they lend money to countries that are facing financial problems, but it's not just a here, some cash, good luck situation. The IMF usually requires countries to make a certain reforms, things like cutting down on government spending, improving tax system, or making their economies more open to trade. Second, the IMF monitors the global economy. It keeps an eye on the economic health of member countries. And if it spots trouble on the horizon, it can step in early with advice or support. Think of the IMF as the world's economic doctor. It checks up on countries, gives advice, and prescribes medicine, which in this case is money and reforms to help economies recover. One of the coolest things about the IMF is its global reach. Since nearly every country is a member, the IMF plays a huge role in international cooperation. It brings countries together to work on their big problems like poverty, inequality, and financial stability. In fact, the IMF doesn't just deal with individual countries. It also steps in during global economic crises. During 2008 financial crisis, for example, the IMF was there to help countries stabilize their economies and avoid a full-blown collapse. Hey, before we keep going, if you're enjoying this breakdown of the IMF, don't forget to hit that like button and subscribe to IX. We've got a lot more videos coming your way about the world of finance and economics. Plus, it really helps the channel grow. Now, I know what you might be thinking. What's the difference between the IMF and the World Bank? Aren't they kind of the same thing? Well, they are related but have different rules. The IMF is mainly about stability. It helps countries facing economic problems get back on track. The World Bank, on the other hand, focuses more on development. It provides long-term loans and grants to help countries build infrastructure, reduce poverty, and grow their economies. Basically, the IMF is there when a country's economy is in trouble, and the World Bank is like, hey, you want a loan to build some new highways or a school? I've got you. So where does the IMF get all this money to lend out? Well, it comes from its member countries. Each member country contributes money to a pool, and the amount they contribute depends on the size of their economy. The bigger the economy, the more they contribute, and in return, in the bigger economies also more have say in IMF decisions. Countries like the US, China, and Germany are some of the biggest contributors and therefore have the most voting power when it comes to making decisions. But the IMF tries to make sure every country's voice is heard. Of course, like any big organization, the IMF isn't without its critics. Some people argue that the conditions it attaches to loans, like cutting government spending or privatizing services, can hurt the very people IMF is trying to help. There have been protests in various countries where people felt that IMF policies led to increased poverty and unemployment. Others say the IMF focus on economic reforms sometimes overlooks important social issues These are validity-based and they show that even global institutions have their share of challenges. So there you have it. The IMF is like the world's financial safety net, helping countries in crisis and keeping the global economy stable. But it's not without controversy. What do you think? Does the IMF do more good than harm? Drop your thoughts in the comments below. Thanks for watching, and don't forget to like and subscribe to IEX for more videos that makes finance and economics easy to understand. Stay smart, stay informed, and I'll see you in the next one. And don't forget, knowledge is power, especially in finance.